Hello, everyone, and welcome to Money Tip. This is Jim Ludwig, broadcasting from my home office in Las Vegas, Nevada. And today I want to answer the question that has been posed to us a lot over the last month or so. Should I buy gold? And it's a good question. Let's take a look at some of the issues. Well, gold versus some other investments. Let's talk about it. No cash flow from a gold investment, no interest, no dividends. You just have to buy it and hold it and then sell it. And then you'll recognize some value for it. When you do sell it, if you've got a gain, then it's going to be taxed at a 28% capital gains rate and not the normal federal rate of 15% for long-term capital gains. The price of gold is based upon supply and demand. When people are nervous and uneasy, especially during this time of pandemic, they bid the price of gold up. More people want it, the price goes up then. And the reason they're buying it is because they're believing that it has a store of value. It's worth something. And it is. It's worth something for cosmetic reasons, and it's worth something in exchange for other kinds of things of value. But timing is important when you're buying and selling gold. You've got to buy it right, and you have to have a good idea that it's the time to sell and trade it for some other asset, whether it's money or securities or property. And you know, the price of gold is just as volatile as the stock market. And it really hasn't been a good long-term strategy. So let's take a look at that. Here is a chart of an index, the Wilshire Large Cap Index. It consists of 750 companies. It's a total return index in that dividends are reinvested. That's the black line, and I've labeled it. And the Wilshire Large Cap Index started in 1978. So that's where that vertical line is on the left-hand side. I've labeled gold, which is in yellow, and the S&P 500 in red, with the Dow Jones Industrial Average in blue. Neither one of those indexes has dividends and being reinvested. Silver is at the bottom, hasn't done very well. Well, let's take a look at the last 5 years when you could have bought stocks instead of gold. How about if you bought Amazon in red, Microsoft in black, Apple in pink, or Facebook in green versus a gold ETF, exchange traded fund, trading symbol GLD. You could have bought it and it reflects the price of gold. Which color would you like to have invested in 5 years ago, and where would you be today? Yeah, you make up your mind. Okay, how do you know when gold is a good deal? You don't. Usually when you think gold might be a good investment, it's usually too late, like it was in 2008 when it was $1,200 an ounce, or in last month when it was $1,900 an ounce. And then you have to believe it's going to go to something like $5,000 an ounce to be a good deal over some period of time. You also have a storage problem with gold, actual gold, whether it's coins or bullion. Where are you going to store it? I once had a client who had a floor safe in her garage where she had all her gold stored. And I said, well, who knows about this? Because I was afraid of the risk of somebody stealing it. She said, only the guy who dug the hole and put in the safe, my son, and you and I. Okay, well, that's a storage problem. And in a crisis, people say, well, I'll use gold in a crisis. Okay, the number one need might be food. So you go down to the Kroger store and say, I want to buy some groceries with my gold. Are they going to accept it? Probably not. Why? Well, then they have a storage problem. So that's another issue you need to consider if you're going to buy real gold. So to answer the money tip question for this week, should you buy gold? Well, I don't know. You decide. But know the facts and good luck on timing. Thank you. This is Jim Ludwig with another money tip, Main Street Financial Planning. Have a good day.